Hey, what's going on, guys? This is Eddie Harvey here from TradeWithEd.com. So I want to talk about Forex trading with $200. What can you make happen with that? All right, so now when you look at $200, depending on the person you talk to, it may be a little amount of money for some and a lot for others. At the end of the day, $200 is still money that you can use to get started trading with. All right, so a couple of ways that you can leverage $200. You know, obviously, I've been taught, and I tell people, if they say, well, how much money should I have to start trading with? It all depends. Depends on your budget. I don't know, but at a bare minimum, I would say worst case scenario, to be able to have a little leverage, a little money to work with, you want to have a minimum between $100 to $300. Okay. Now you can open trading accounts, guys, with $10, $20, depending on the broker that you're doing, but you want to have $100 to $300 as far as what you're looking to work with in order to get into the markets and start seeing some type of results. Because here's how you can work that $200. You can go and, let's say if you're taking, look at your lot size. If you're doing proper risk, if you're doing proper leverage, you want to be doing, looking at if it's $200, you want to go 0.01, because that's all you trade as a micro if you're doing it the right way, right? Which is equivalent 0.01 is 10 cents per pip, 0.02, 20% per pip, and so on. So you want to look at 0.01 lot for every $100, okay? So if you have $200, that should be what, a 0.02 lot size, right? Now, with that 0.02 lot size, you're looking at leveraging, you want to risk no more than 1 to 3% of your account. So 0.02, when you look at that, if you risk 10 pips, that's 1% of your account. 20 pips is 2%, 30 pips is 3%. So if you're looking at what you're risking anywhere from $2 to $6, okay? Off of that $200 account, which is not bad at all. So even if you lost on a trade 30 pips, you're not freaking out. You're not going into panic mode. You're not like, damn, all I had was $200 now and just blew my account, or I lost half of my account, because you're not over leveraging. That ain't number $6, you still got $194 left, versus if you went in and did, instead of 0.01, went in with 0.1, which is $1 per pip. Now you're looking at, if you did 0.2, which is $2 per pip, right? Let's just say you went 10 times that, you went 0.2, which is $2 per pip, and you lost those same 30 pips. Well, now you just lost 30% of your account instead of 3, which is now $60 instead of $6. So do you see the difference, right? So it ain't nothing you got to worry about, okay, if you're doing things the right way. So that's one way you can trade it. And then on the flip side, if you won 30 pips, hey, that's $6 you won. If you won 50 pips, that's $10 you won, just depending on how you're looking at it, right? But that's one way you can trade it. Another way, guys, is you can do what's called twin trading. Now you take that $200 and you split it in half. So instead of trading just a straight $200 on one trade, you can do a twin trade and break it down to $100 on one trade, $100 on the other trade. Again, proper risk, proper leverage. You just want to risk 1 to 3% of your account, 0.01 at this time, right? Which is 10 cents per pip. But you're risking anywhere from now $1 to $3 on one trade, $1 to $3 on another trade. So you still got your $200 is just broken down, right? It's just like you divided it. But at the same time, that's a way where you can double your trades, where if you got one trade going, and let's just say that trade hits stop loss, or you're able to take some pips profit on that trade, you can ride the other trade out and make even more. So these are the things you learn, guys, when it comes to trading. But with $200, that's just a way you can leverage that. And you figure at that $200, right, you can take that $200 and now turn that into a lot more, depending on if you're catching a consistent, I'm not going to go into numbers and all of that, but if you're catching a consistent amount of pips per day, and let's say, I just say this really quickly, okay, let's just say you caught at 0.02, right, which is 20 cents per pip. Let's just say you caught 100 pips for the week, okay? 100 pips times, what, 20 cents per pip? That's actually $20 you made, okay? But now it's steadily increasing your balance. So as long as you continue to increase your balance, just say you turn that 200 into 300, right? Well, now you're at $300. What does that mean? You can now increase your lot size to now where instead of 0.02, if you want to, you can stay at 0.02. You can go down to 0.01, but if you want to, you can now go up to 0.03 because you're looking at $100 for, $100 for every lot size. So that's just a way where if you look at over time, it can compound, and that $200 can grow into something more if you have proper risk and proper leverage in your trading efforts, guys. So I hope you all got some value from this. That's a way. I'm sure there's more other ways you can trade $200, but those are the ways I'm looking at where you can work with a $200 account and make some things happen. All right. So guys, I hope you receive some value from this. Hey, listen, if you want to learn more about trading Forex, if you want to learn how to trade and also how to earn while you're trading, utilizing tools that help you get in the markets, even if you know nothing about Forex, right? And if you want to get a complete comprehensive education, all of this rolled up into one, you can find out more by clicking the link below this video or going to tradewithed.com. All right, with that being said, I will talk to you all later. Take care and have a great day.